reckon they've got to be careful.
Good morning, everybody. 2nd of September. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Morning, Steve.
Morning, mate.
How you doing?
How many is this we've had? We've over 450 now.
Yeah, 452 episodes of Talking Ball.
Wow. Feeling old
Good.
now, mate.
Yeah. Yeah. So all going good on that basis. In terms of latest news, what's happening? So we had OPEC yesterday, didn't we? Oil futures declined off the back of the OPEC Plus meeting as they stuck with their plan to boost crude oil production. The cartel wagering that the global market can absorb the additional supply as demand improves and stockpiles get drawn down. So we'll come on to the charts on that shortly and how that impacted yesterday's price action and what it looks like for the day ahead. In the UK, in terms of coronavirus news, the UK is set to offer a third dose of coronavirus vaccines to people 12 and older with severely weakened immune systems. I guess that will be a route taken by other countries as well. Early data from Israel, who also did this, which began rolling out booster shots in mid-July, showed that a third shot provides added protection against the coronavirus during the Delta outbreak. In terms of geopolitical news, we've got US President Joe Biden sorting to reassure his Ukrainian counterpart that the US would counter Russian hostility towards the country as the leaders meet for the first time at the White House. Obviously, they've got a fairly complex relationship due to what's happened previously with Trump. And also some investigations into Joe Biden's son. So we'll see what happens there. That's pretty much it on the news front, pretty light. We are a little bit on the back foot today on the indices from what I've seen early on. Looks pretty mixed, but we'll get stuck into the charts and see how things are looking on that front. In terms of overnight data, it was mixed as well. Japanese stocks provided the one bright spot, while the Australian ASX lagged behind. That came despite an improved Australian trade data trade balance reading, with export growth at 5% outstripping imports of 3%. Steve, where do you want to start today on the chart front?
Well, let's dive into indices, shall we?
Sure.
We'll start with the FTSE. We've got, the chart looks a little bit messy. Let's get rid of some of this stuff over here, which is quite distracting for me. It hasn't got much attention span. So we saw price action yesterday morning pushing higher when we opened, and it looked pretty positive on the FTSE, but it stalled at a high of 71.90 and reversed sharply lower after that. We're seeing a little bit of positivity creeping into the market over the last few hours, but again, this puts it on a little bit of the back foot, as Joe said. If we look at the daily chart on FTSE, it looks like a bit of an ending wedge formation. And again, the candles aren't looking great. Didn't look too bad on Friday, but last Thursday. Friday we formed the bearish engulfing candle. We poked ahead above it yesterday, and am I getting all my days mixed up? I am. So that's Monday, Tuesday, and Wednesday, but it rejected quite firmly, as we saw. So that all these look a bit toppy, these candles. So really need to sort of push above the 7200 level to get the bulls back on track, but it doesn't look likely today. Similar sort of candles in the DAX. We'll have a look at the 4-hour chart, give us a bit more color on this. Again, we've stalled just above the 16,000 level. That was on Tuesday, and yesterday it's another lower high, and we can see the bearish engulfing candle, which put an end to the attempted move higher. They got up to 15,983 yesterday. The Dow Jones also, we're not talking about all-time highs. Where's that going? That stalled at 35,517. Again, this 35,500 level proving to be a bit of a psychological level. And we saw 12 hours of negative price action, a little bit oversold at the moment. We were probably due a little bit of a correction but looking really to maybe sell into any rallies at the moment. Nasdaq, new all-time high in Nasdaq. That didn't let us down. Another psychological level, 15,700. It's always these round numbers that traders like, and price tends to gravitate towards them round numbers, especially when you're making all-time highs. There doesn't seem to be any other reason to sell or to take profit apart from round numbers. We can put some Fibonacci projections in there or measured move targets, but they're the go-to one that a lot of traders use, and when a lot of traders use it, then it works pretty well. The S&Ps didn't quite make an all-time high. We've got a lower high there coming in at 4,542. We're down below this upward trending resistance line, which I drew in from points way back, and yeah, that seems to be sort of on the back foot at the moment as well. So really looking for a clear break of 4,500 to then lead to further downside, potentially a bit toppy on the formation side of things, but still a bit of a way to go before we get anything. There's a double top formation that will be formed with that, and that would have a projected move of around about 30 or 40 points on the downside, so maybe targeting a move to 4,485. Aussie 200 under pressure, but we have just reacted off this longer term upward supporting trend line. Let's put it on a daily chart. It'll make a little bit more sense. We've got 1 point, 2 point, 3 point, 4 points, multiple points recently. So yeah, that looks pretty good from that perspective. 7,560 is where we've rejected. We've seemed to have like a bit of an ABC correction lower. We've stalled in front of the previous swing low. Really need a break of that 7,400 to really put the pressure on the bulls in this. But I suppose we could really view this as a bit of a bear flag. So this channel should contain price action. A break either way of this channel and should lead to an extended move, either higher or lower, but lower is the favored view with this sell-off. China 500 has stalled at this downward trending resistance line, which we had drawn in, and we had a horizontal line drawn in from way back here where we found support, turned into resistance, and it's turned into resistance again. So it's met at quite a nice confluence area of trend lines there and stalled and moved lower. For me, 14,500 is the line in the sand for China. I still believe we're going to get there eventually, and we're correcting this overbought condition with negative price action this morning. The Hang Seng has formed a bearish outside candle on the 4-hour chart, and it's looking negative. If we can get down below 25,950, then that should accelerate as well. Really needs to get above the 26,330 to wipe the smile off the bear's face. Nikkei also, we've poked our head above this resistance level, which goes all the way back to this point here in March, and price action has held here over well, just over a day, but it looks under pressure. It looks like we've formed a little bit of a top here, so wouldn't be surprised to see another move lower after breaking the 28,400. This momentum we've seen in the move higher over the last couple of days looks to be dissipating as we move into the end of the week. Let's take a look at commodities. As Joe mentioned, we had oil inventories out yesterday. We had OPEC plus nations sticking to their not causing a surprise, I suppose we can say, and we saw negative price action, but it was supported at the previous swing lows, which we saw this. So for me, this could be a nice pivotal level here, 66.80 on the WTI crude oil. Where would it be on Brent? Maybe, well, it would be higher, we know that, but maybe sort of like more like 69.80. Obviously Brent trading that bit of a premium. 69.39 was a previous swing high. 69.32 we stalled in front of over the last couple of days, and we've had multiple touch points or stalls in front of, so lower highs here. So this looks to me, again, the overriding formation that I'm looking at is the monthly chart, which has formed an evening doji star formation. So I do expect this oil story to have a deeper correction than we have seen. So for the bulls, they'll like to capture ground above 69.40 on WTI. That maybe opens up further extended move up towards 73.85. But for me, I'm more interested in the bear approach to this. 66.80 should lead to a revisit to the 61.50, $60 area. Take a look at gold. We had this channel formation that we talked about with a measured move target up towards 1850. We seem to be building quite nicely here, but I think the jury's still out for me on gold. 1832 to 1834 looks like the sort of like the quite solid resistance at the moment. We're trading a bit mid-range, so we seem to be grinding higher with very little momentum. So I think a sharp move. It looks like we're building one of those Bollinger Band moves, where the Bollinger Band's really sort of like crushed the sort of like daily range, and then it get ready to explode. Really based on the dollar index. Dollar index improved slightly, I think, over this week. So maybe that's held gold back a little bit. For me, I would still be looking to sell a retest of this 1833 level and go with the flow below 1800 to see maybe another revisit towards the 1775, 1780 area. Cryptos, quick look at cryptos, and it looks like to be building for another challenge. Again, I don't know how this will play out when we see there's a lot of lines down here. I'll try and make this chart a little bit more. Yeah, I mean, a pretty nice move really from the support we had at 46,300, posted as a bit of a bullish hammer down here and formed a bit of a morning star reversal. But we are overbought, and we've stalled again in front of the 50,560 level, which was the swing high from the 23rd. So even maybe have to look at the hourly chart, and we can see a bit of a rejection shooting star candle forming on that. That's closes at 9 o'clock, so we've got another 13 minutes for that. Yeah, but again, on the RSI, it looks a little bit overbought. So maybe we've made this attempt. The ATR bands coming in, suggesting fading in front of the 50,800 and looking to sort of like maybe take profit around about 48,150 if you manage to get that on. So yeah, don't know about Bitcoin. Feeling of it is it's just a little bit overdone on the upside, but nothing surprises me nowadays. I don't know if the FX is looking any more transparent, Joe.
Not really. It's all pretty choppy, to be totally honest. So let's have a quick look at dollar index. This continues to correct following the failed attempt at a breakout above 93.43. As you can see, price action has been dwindling lower. We did post what looked to be a bit of a reversal candle on the 31st, but that has been not backed up so far with further strength. Yesterday we saw actually a bearish outside candle. But it didn't come sort of at the top or the bottom of a trend. It just looks more like a continuation to me. And in terms of where this could potentially head, well, just drawn on a bit of a fib table here, and we've got a 50% level down at 91.63. It also marries up quite nicely with this uptrend line. There's a number of lows down here which we can marry up to get 3 or 4 touch points and then project that line higher. So roughly speaking, we've got some a band of support in and around this kind of region between sort of 91.78 to 91.63. So in the absence of any news, which doesn't look great at the moment, but we do obviously have non-farm payrolls tomorrow, so that may get things moving. At the moment, it looks like we are grinding lower towards these kind of levels down here, at which point I would expect some buyers to step in, and still of the belief that we are in a slow process of building a bottom on the dollar index here, but nothing is particularly straightforward at the moment. So in the short term, I think selling into rallies could be the preferred play. But of course, we've got this non-farm payroll number due out tomorrow. Looking at Euro USD, I don't expect the picture to be much clearer here as a result of what we've just seen on the dollar index. We saw a failed breakdown below 117.04, and since then prices have been moving quite nicely higher. The next resistance level that we have here is up at 119.08. Looks good to potentially go and test that. So we'll have to wait and see how prices react. Once they get there, if we can overcome that level, then we'd be looking for potentially an even higher correction to the upside. And in terms of where I'd be targeting, I'd look for the fibs for some guidance. 119.65 would be 50% of this, what I'm calling the right shoulder move. So maybe that would be an upside target to think about, unless everything changes when it comes to the non-farm payroll number tomorrow. I think if the number is better than expected, then I'd expect a strong dollar. But given that the ADP number was weaker than expected yesterday, maybe that's factoring into the thinking a bit, and people are beginning to think that maybe the numbers have topped out a bit on the jobs, and we could see a little bit of weakness there. So we'll have to wait and see. As a result of the dollar weakness, we are seeing a push into riskier assets. Aussie is doing quite well, despite the fact that they've got these lockdowns and restrictions on travel. That's broken out of this channel against the Canadian dollar. If we look at Aussie yen, that's really moving quite nicely higher. We do have a big band of resistance that this will be challenging between 81.97 to 82.28. So it'll be interesting to see how price reacts up at those kind of levels. Aussie US dollar, that's also had a really nice move following the lows that we saw down here, which got pretty close to the measured move of this head and shoulders top pattern. So again, quite interesting to see where this can potentially get to. Resistance there at 74.26 in the short term. Looking at cable, just to sort of round up here on the FX side of things. Obviously, I could go into more detail, but just want to focus on sort of the most popular areas for now. Not really much going on here. Pretty sideways. Yes, we've had a bit of a bounce in the short term, but it's certainly not looking as or strong as some of the other riskier assets, for instance, like New Zealand dollar and Aussie dollar. I've got some resistance here at 138.27. If we can overcome that, then we're also going to take out this short-term downtrend line, and therefore what we may see is just more chop between these prices at 135.71 to 142.10. So there may be opportunities within this kind of range here, but overall, I don't think there's too many opportunities present in this pair at the minute. So we'll have to wait and see. That's it from me on the FX side of things. What we did say, or have been saying, is that potentially now that we're into September, things can start to pick up from a volatility point of view. Maybe non-farm payrolls tomorrow will be the catalyst to start picking up some volatility. On the technical front, Steve, and we've got off to a pretty good start on the gun to the head challenge for September. You made 1.7R yesterday on your oil trade. Obviously, you were helped by what happened with the OPEC situation and the inventories number. But I also had a decent win on DAX of 2.36R, coming up just short of my target, unfortunately, at its worst levels of the session. But yeah, decent start, Steve.
Yeah, so, hallelujah! I hear them shout.
Yeah, nearly 4R
from the stands. Yeah, nice one.
Over 4R.
I was a bit devastated, really. I looked at mine. I think I was going for a 5-to-1 risk reward. I think it hit over 4-to-1 at one point, and then we saw prices correct higher. So I think I just, if I'd have paid a bit more attention to the target, should really have sort of like brought it a bit closer to where them swing lows were from the short-term 4-hour chart. So yeah, could have been a lot nicer yesterday, but anyway.
You're under duress, Steve. You had a gun to your head, so you made
I suppose.
You
can make silly
mistakes.
Didn't
have time to sit there and map out your trade, but
yeah,
that's the game. So what do you fancy today?
Well, I might actually go cryptos, just because of the sort of like bit of a rejection we've seen on the short-term chart. I know it's sort of going against, um, you know, what the masses want to sort of like see do well. One thing I did mention was the Cardano that broke the all-time high, and has poked its head up to 310. Still think there's more in Cardano on the upside, but I'm just looking from a short-term perspective, just on the hourly chart, potentially we formed a little bit of a top, and with Bitcoin rejecting there. So there is maybe something on the downside, but because I feel positive about Cardano overall, I don't really want to use that one. So I might go for fading this recent spike high we've seen in Bitcoin and just target around about a 2-to-1 risk reward. We're forming a bit of a shooting star candle on this hour for Bitcoin. So getting short at 49,866. That's round, I'll say 866. Tried to nick a tick there. The stop is pretty right. A 700-point stop, and maybe the target. Yeah, why not? Yeah, what's that? A 1,600 point target, 48266. I'm looking, which is the TR band, and a little bit of support here from this candle. So yeah, risk reward is about 2.3. Yeah, getting short crypto, Bitcoin. Stop is at 5566, which will be the breakout of that this 4-hour candle, or this hourly candle, and a 4-hour candle.
I had the same thing set up, Bitcoin, selling it in this sort of range, so I
Here we
won't do
go.
that.
Oh no, we could do it.
No,
I don't want to
I
sort of
don't want
put
all
you
our eggs
off.
in one basket. That's
What if
I'm
it
going to
comes
look
off,
at.
and we could have like had a real good 2 days?
Yeah, maybe. New Zealand dollar, Japanese yen. So these have had a really good move higher, as you can see. Really strong push to the upside into some resistance here. We've got a resistance level from the 11th of August and also touched again yesterday. And we're there again today. Have we got what it takes to break through on this? Not so sure. So let's have a look. Got a nice trend there. Certainly the trend is good for now, but we're into this resistance level, so I'm going to try and fade it. 77.89. Tightish stop. Yeah, that'll do. 20 ticks. And if we break down through this channel, then things could really start picking up. So let's go for a target there. 77.08. Looking for 4R on that one today. Counter trend in the short term. Let's see.
Brilliant.
Okay, what's going to move these markets today? I think everything is sort of focused really on what happens tomorrow with the non-farm payroll. So it was a big miss yesterday from the ADP number, so that will be obviously weighing on people's minds and sentiment ahead of that number tomorrow. We've got initial jobless claims today at 1:30. We've also got US trade balance at the same time. So a couple of bits to keep an eye out for at 1:30. So that's pretty much it.
Nice one.
Cool. All right. Well, good luck, everybody, if you're trading today. We will be back tomorrow morning on Non-Farm Friday. And until then, trade safe.
Cheers.
Cheers. Bye.